I'm almost done. We got to go through the fun part. For this week's regular portfolio segment, I spoke to a special gentleman from the UK who recently turned 65 and, as a retiree, now spends all of his time researching junior mining stocks. He's not selling anything, for as far as I can tell, but he does have a background in market research, marketing, and analysis. So I thought it would make a good conversation to figure out what he's investing in. If you want to talk to me and be part of the regular portfolio segment here, you don't need to be anything special. I mean, look at you need to be yourself, okay? And just send me an email at antonio@researchtalks.com, and we'll have a quick chat about your portfolio. But let's figure out what Ken's strategy is over here.
Honestly, I have 5 kids, and lovely wife. I've been married over 30 years. My main concern is setting up the kids properly for the future. I think I'm one of those people who understood very early on that it's much better to give than to receive. And when you're a father and you've got fantastic kids, you love buying them something that makes their face light up with joy. And so that's my focus now. So the kids are very comfortable in property, less so in shares. But slowly, when they started seeing the kind of returns that are available, they're becoming more and more interested. So, that's my focus.
Okay, so that's your focus. So most of your money's not in the natural resource. I'm imagining. Well, what part of your portfolio in percentage is in the natural resource space right now?
I would say around 25%, but I'm looking to increase that because I believe that, first of all, a caveat, the world's a crazy place right now if you see what's going on around the planet. So assuming we don't have a black swan event, I see that we're entering a super cycle for commodities, especially things like uranium, as you know, copper, very much, battery metals, and gold is very interesting as well with what's happening in Russia. And what seems to be happening is a move away from the dollar and fiat currency in general. I think there's a lot of people who would very much welcome a gold-backed currency. And I know from things that William has said in his other interviews, a lot of his high net worth clients are like, get me out of fiat into something that the government can't print more of. And physical gold and silver is an obvious place to go.
If you had to put a percentage on it, though, because you're talking about energy, but you're also talking about precious metals, out of that 25%, is more than half of that in uranium right now? No? Okay, so how much of it is it?
I would say right now, probably 70% is in energy. We've just taken a major position in MPK, which is Verd Agritech. There's a special situation happening there I'd like to talk about. And then a graphite company, a gold company. What I see is shares that come 40x, basically.
Well, let's talk about those companies, because this is sort of my favorite question, which would be the gun to your head scenario question that says, if you had a gun to your head and they told you to sell everything and only keep 3 stocks for the rest of this commodity bull cycle, which stocks would you keep?
I'd keep MPK, which is a potash company.
Mm-hmm.
It's one of the fastest growing companies in the planet. The market cap is under 300 million right now. And they had a blip in the move to the phase 2 factory where they had a groundwater problem. The share price has been off like 30% the past week or so. But this would be remedied within the next 6 weeks. Okay.
So what's the second one?
Second one, PBR, is the largest oil company in Brazil. The valuation in terms of the relationship of the market cap to cash flow is ridiculous. It's like you get in the shares for nothing. The dividend is 40%. And the government puts pressure on the big companies like PBR to increase the dividends because the government needs the money. I think oil prices, as you've seen, have been very strong. What's happening with gas prices now, there's a report out this morning from Platts saying that the increase in gas prices may actually help the oil price because of people switching out of gas back into oil. and it could be substantial. And people have spoken about renewables. Renewables, despite trillions of dollars being invested, they don't account for very much of the energy supply right now. There are huge structural problems with it. Fossil fuels are going to be around for a long time. And the valuation of PBR with a 40% dividend just doesn't make any sense to me. So that's for me a no-brainer for holding. The third one, I'm torn. I'm torn between Celix, who you know.
Celix, yeah.
A wonderful company with a fantastic future because of the competitive advantage they have in enrichment using the laser technology. They also have high-grade silicon, which is going to be needed in quantum computers.